talking retail stocks in the show. Let's bring in Charles Moon of Prosper Trading Academy. And Charles, what retail names do you like best?
Well, what's very undervalued in terms of retail names right now to me is Kohl's, KSS. KSS is a big factor here. They really found a floor right around this 1850 range. And if they hold this price level moving forward, this could be what's considered a high demand zone. It just seems that Kohl's is not allowed to really drop below this price range. So for me, when we look at the longer term picture in terms of performance, we've seen a lot of the retail names bounce back. We've seen Target, we've seen Walmart hold steady, and they're always great performers going into the holidays. Of course, Amazon is as well. But I really believe that Kohl's is undervalued. Even if it gets up to that 25 range, it's undervalued. I still love the upside. I really think it's going to make a big push here, and I think it's going to be helped propelled by the holidays. A really sneaky name to keep an eye on as well is Overstock, OSTK. Now, there's other factors that could help drive up the Overstock price, but what hasn't been talked about is how good their e-commerce business has been this year. Because of the COVID effect, they've seen a lot of e-commerce demand, more so in years past. And that's been a big driving force in terms of performance. And the last name I want you to keep an eye on is DDS, Dillard's. So they've actually been making a pretty nice move lately. They've been waking up. A lot of people have been down on this company, but overall, we've seen that their earnings reports actually show the opposite. And it looks like there's what I would feel a great value play in that name. And again, we're looking for that holiday bump, and that could be what would be one of the major factors in terms of driving this price even higher and have it steadily climbing with the trend.
What do you tend to do as a trader? I know you traders like to stay ahead of the curve, but this is such a fluky year. What are you doing?
Yeah, absolutely. So it's obviously always better to be in early, right? But being in too early sometimes it plays. The residual effect is the psychological effect, right? People are down, they end up ditching, and then the stock goes up. So, when it comes to what we would say timing in the markets, sometimes timing is extremely important. Now, when we play seasonal opportunities or we're playing, secular opportunities, at that point, sometimes timing doesn't matter. It's just the broad movement, the broad sweeping movement. So I guess for me, it's always going to be an issue of timing. Way too early could play a longer term effect psychologically. Being a little too early, it's really not that bad. Again, it's not like every trade that you ever get into is going to immediately go up or immediately go in your favor. That's not always going to be the case, right?
Well, thanks so much for being on the final trade of the day with us today, Charles.
Thank you for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.